Hello and welcome to another edition of the Finance Freaks podcast. This is our 52nd podcast. We've been doing it for a year. And because it's our 1 year anniversary, we have a very, very special guest with us, Steve. Um, Joining us today is Michael Iavarone. Um, I've known Michael for 30 years. We've worked together at the same firms, and we've owned a few racehorses together. He's a great friend and a lot of fun. He's going to be talking to us about SpaceX. I want to kind of give you a little background on Michael, but I'll start with a question, even though I know him for 30 years, because I'm not sure what the answer is. Michael, how do I describe you? Are you a financial consultant that has an uncanny ability to pick winning stocks? Who, as a sideline also is a thoroughbred horse racer who has an uncanny ability to pick winning racehorses? Or are you a thoroughbred racehorse guy and the financial consulting is your sideline? Which is it?
Yeah, that's a challenging question. Pretty simple. I make my money doing private equity, but my passion is horse racing. So without the private equity side, I probably don't have the money to buy the horses because there's an old saying in the equine world, if you want to become a millionaire buying racehorses, start off as a billionaire.
That's
You know, it's a very difficult business to make money in. And private equity is something that it's been 15 years or so since I've developed this niche in what I used to always do as far as manage money, and it's worked out really well for me. But my heart is still at the racetrack. There's no question about it.
Yeah, they say if you want to make $1 million in horse racing, put in $1 billion in weight.
Yeah, it's
That's funny.
exactly right. A
That's
lot of
funny.
tax write-offs.
But you have had some really great successes. How's the Puma? He was set to run in the Kentucky Derby, and then he got scratched. How's he doing?
Yeah. So I was just having a conversation the other day with my electrician that was doing work here. And he was saying that, asking me questions about the Puma. I guess the Puma became big news. Obviously, Taylor Swift and Travis Kelce owned a piece of the horse with us. So it became mainstream media. So, he looked at me like he was completely stunned and confused as to what happened. And what I've learned in horse racing is everything could happen. And strangely enough, I've had three entrants in the Kentucky Derby in my 30-year racing career. And that's a lot. I mean, that's the hardest race to get into.
Yeah.
And crazy enough, of the three, I had two of them scratched the morning of the race. One of them as the favorite. The Puma was the second favorite. And then the other one, I won it. So I am literally on the penthouse or on the basement when it comes to that. But the Puma's doing great. And he is very healthy right now, back training full, and he will run in a very prestigious race, the Haskell Invitational at Monmouth Park on July 18th. It's a grade one. It's produced a lot of stallions, and we have really good expectations and hopes for him going forward.
Yeah, for people who don't know, you won the Kentucky Derby and the Preakness with Big Brown. That was your horse. And
Yes.
then he might have won the Belmont for the Triple Crown, but he got stepped on and his shoe got bent, and that prevented him from running at full capacity.
Yeah, and then add to that, he became a stallion, and the best progeny he produced was a horse that we own together named Manhattan Dan, who was named after your son, and he was a multiple stakes winner and was on his way to Ascot, and then he had an unfortunate issue where he slipped on the concrete. So,
And we tried
the
too to
game can
get him
bring the
back.
highest to highs and the lowest to lows. That's for sure.
Yeah, yeah, but Manhattan Dan nearly won the Breeders' Cup. He lost it in the last eighth of a mile. He ran out of gas a little bit.
Yeah.
But you won the Breeders' Cup this year, didn't you?
Yeah, that was kind of remarkable. I had been trying to buy this particular horse for months, and I just couldn't come to an agreement on the deal. They wanted more than I probably wanted to spend on him. In the end, they decided to put a percentage of him to auction, public auction. I ended up paying more in the public auction than I wanted to pay in the private. So I bought him 3 days before the race, and he won the Breeders' Cup. And he's taken us to Dubai where he ran second in the Dubai Golden Shaheen. He just ran second last week on Belmont Stakes Day. And we have all plans to make it back to the Breeders' Cup again this year with him. But that's been a fun ride. $1 million for a quarter. So he's done pretty well for us.
Hey,
So
Mike, can I jump in and ask a question?
Sure.
Yeah, so when the private equity you do, is it part of the horse racing? Is it that you do tranches of private money into the horses, or is that a totally separate thing you do?
The horses are totally separate. Private equity is something I do through our broker dealer that I work for. And the racehorses are purely my passion. And a big part of horse racing for me is the benefits that it brings from a tax structure. When the new bill came into play under the Trump administration, they allow for bonus depreciation on horses of any age. So let's just say I buy a horse that's 4 years old. I pay $1 million for him in December. I could take that $1 million and write it off directly against my ordinary income, not against capital gains, directly against my top line. Then the beauty of it is, if I hold that horse for more than a year, it now becomes a 20% capital gain from a zero basis. So there's, for people that have 1099 income, there's a built-in 30% barrier just from the tax structure. For, let's say you live in the state of New York, you're probably paying 50% on your ordinary income tax. You're getting that full write-off, and then you pay 20% of the capital gains on the backside. So it has offset a lot of the downside of owning racehorses, and it has increased the value of the equine assets significantly since that bill was put into play.
a mutual friend of ours
Good.
told me that you did put together a private placement to give investors some of those tax benefits as well through horses.
Yeah. So I did a very small group of people I know, and we pulled money together, and we created this small but pretty solid 20-horse stable, mainly for high-end racehorses, knowing that these people could benefit greatly from the tax side. So I did that. I raised money quickly for it. It's been really successful. I'm a significant part of the investment group myself, and it's been really, really good for us. We closed out the funding about a couple months ago, and it's been a blast. And we've only done it with maybe 20 guys in total, but it's really been good. And I did it really for the tax side, but we've been incredibly fortunate. We've been winning over 20%, in the money over 60%. Horses have been really, really running well. I've used a lot of trainers all over the country, and it's been a lot of fun.
Yeah, you're not supposed to make money on things with that type of a tax structure. The money making is a bonus. So
Yeah, anything with a tail is usually on the debit side of the ledger.
Fair enough. So okay, so let's get into SpaceX. It's been a long time coming. I mean, how long have you held shares in SpaceX?
Wow, I don't know exactly from a time standpoint, but it's been a while. So we started investing when the valuation was around 100 billion. So I'm guessing maybe like 6 years ago, 5 years ago, something like that. And I just kept buying, and I always felt when I made the investment that they were a disruptor. What they've become is not what I invested in. And I'm just very lucky that Elon Musk has this vision that none of us do. And, it started off as a rocket company that was going to build a string of satellites to provide connectivity in areas that where regular connectivity wasn't available. And I felt that there was a really good marketplace for that. The TAM was, say 300 billion, something like that. That grew enormously as Starlink began broadening out. And they are only capturing about 10% of the market share right now in overall connectivity, and they're doing tremendous revenues from it. But now they've become so much bigger and so much more. And a lot of it is obviously built on the come line, right? There's a lot of things that still have to be proven out, such as data centers in space and you name it. But what has really, really happened for them is in the last, I would say, year and a half, they've put together items that really put them in the right place to be basically an AI infrastructure company. And I think I've been really fortunate It wasn't what I invested in. It's become what I'm invested in. And that's all the credit to them. And, now that we're seeing valuations bandied around as high as 2 trillion, it looks like it's going to be a home run for myself and the investors. So we're just really very fortunate. It's one of those winners that probably look like 20x when it's said and done. And it gives me a free ride on about 19 deals going forward in case they fail.
Yeah. But everything that they're into, they're the U.S. government is their customer for launching satellites. I mean, clearly, data centers in space make sense. You don't have to pay to cool them, and you've
Right.
got unlimited 24/7
Unlimited storage.
solar
Yeah.
power. So yeah, it kind of makes sense.
Mike, is there a lockup on those shares when they go public for everybody, or just everyone has a different deal the way it works?
So the lockup strategy and structure is interesting, which means to me, and I'll explain why, that this deal could actually go haywire when it lists. So they locked up all the inside stock. Elon is locked up for a year. He owns about 40% of the company. He's probably will never sell. If anything, he'll just borrow against the shares if he needs it for taxes, whatever. But they created a dribble out structure. So 20% of the shares that are restricted become free one day after they release Q2. So Q2 probably will be released maybe the last week of July, the first week of August, something along those lines. So one day after that, 20% will become eligible for trade. In addition to that, after that date, if the stock is 30% higher than its IPO price for 5 consecutive days, that will unlock an additional 10%. So 30% should probably be available for sale within the first week of August. Then at day 70, they free up another 7%. At day 90, they free up another 7%. And then they stag it out until full 180, right? So I think that's more of a controlled release of these shares. Instead of day 180, the whole world is in the money so heavily that they go and they move all those shares. Why they could go haywire is they only have 555 million shares in the actual trading float. So they sold that at a price of 135. In that grouping, they allocated, originally it said 30, they moved that down to 20. They'd allocated that for retail investors. And what we've heard is that those retail investors haven't gotten their final numbers yet, but they're getting dribbles, 20 shares, 40 shares, you name it. So I look at this and I say, okay, there's 500 million shares out there. 20% of that is 100 million going to retail that are getting drips and drabs. I just don't see them selling their stock. I mean, if you own 50 shares of stock, and even if you double it, it doesn't move the dial. I think they're in it for the long game. So I think if you take out 20% of the shares right there, then you look at all the wealth funds and you read about Japan and Saudi Arabia and Dubai and what they're getting in the deal. And then you look at the generic institutions, the Morgans and the Goldmans that are leading this thing. And you say, okay, let's say half of that is going to be sold. I think the real float shrinks down to maybe 200 million shares. That's going to trade like in a day or two. So, I just don't know where the supply is going to come. And I do know that there'll be significant demand. I also know that once the options come into play on the 16th, the retail cult that Elon has had in all his deals is going to go after those calls. That's what they're going to be targeting, right? Mm-hmm. And as we know, that sets up for craziness, right? So when they start buying the calls out of the money and the stock starts moving up, that puts pressure on the market makers to be in position just in case, like GameStop. So I just don't want it to be a meme and turn into this circus and start trading, up 25% today, down 20% tomorrow. It's probably the only deal I've ever seen that is this mature, with this much reality to it already, with this much transparency, that has a structure that's kind of built like a 2000, .com IPO. So I just hope the structure, and I understand why they did it, I just hope the structure doesn't create valuations that are so ridiculous that it sets it up for the new people and the new retail to come in and get themselves hurt.
Well,
that's my only worry in the deal.
Superior to day 180. I agree with you there. Steve and I on last week's podcast said if you're going to play SpaceX in the aftermarket, one thing for sure is you got to play it with a limit order, not a market order, because you'll never know where you're going to get it.
Yeah, and I think the new age outlaws, which is this amazing group of young day traders, they don't trade valuation. They trade stock price and they trade momentum.
Momentum, yeah.
Valuation has nothing to do with it. And as a traditionalist, like think I am. I mean, I'm getting to that point now where I'm old enough. I think valuation has a lot to do with this world, and these stocks inevitably will find their price and find their range. And I think they're just going to trade momentum. And then when the momentum stops, they're going to say, oh shit, and they're going to try to get out, and then they're going to sell into that momentum. So you're going to get this up and down and up and down. And I can't imagine there's a company that is this big, this mature, this transparent that should ever trade like that. But I unfortunately think that that's what's going to happen here. And I know it's trading on these tokenized markets like Hyperliquid era and 165 and stuff. I don't know what that means. I don't know enough about those marketplaces. I don't know what they're actually trading. I know tokenization is, obviously growing, but I don't know how that reflects into the actual shares and stock price and things of the nature. But yeah, for us, the good news is we're priced in so well that I don't have to sit here and trade the market. I've had other private equity deals that have gone public that, I wish I hadn't invested in the private market, because I was buying them in the public market at the same price I was buying them in the private market.
Right,
This is one of those deals where it's the private equity side has really worked out well for all the VCs.
Steve had a question. You were talking to me about it, Steve. If you thought that Anthropic IPO and OpenAI would have a dilutive effect potentially.
Yeah,
Look,
yeah, Mike.
Yeah, we're in territories we've never been in, right? When do we ever recollect companies going public at $1 trillion? Like $1 trillion was a valuation. Look, I remember the days where if you were 100 million, you were a big cap company, right? So now we're talking about trillion, and the market has to digest that, and money has to come from somewhere, and there's questions right now. Is the S&P sell-off and all that other stuff related to the SpaceX deal? We're going to find out, once SpaceX goes public, but the money has to come from somewhere. And when you bring $3 trillion deals back to back to back, yes, it could be dilutive to all of them. Or even worse, it could be dilutive to the actual market and people selling off other positions to gather the funds to do these deals.
I want to say, so I'm talking to people every day, and some of these people, they don't know anything about the market, but all they say to me is, "I'm doing so great in the market. My advisor is amazing," and he's not doing anything. It's because the market is, as you said, just trading with a momentum and no real philosophy behind it, right? But I think that you're right. I think Musk has such a following that people are going to want to buy Musk, and they're going to buy this SpaceX because they're going to think it's going to be $500 in 2 weeks from now.
Right. And how I know we're in a bubble. I got a text message yesterday from the guy that cleans my roof asking me how he gets into SpaceX. That is usually the beginning of the end.
Yeah. My ex-father-in-law was a laborer, and when he called me in the late 90s to buy Intel, I said, that's
it. That's it.
Yeah.
When it's their time to buy, it's usually our time to sell.
Yeah.
That's the truth. But I don't know. I do know one thing about Musk. And his antennas they're far reaching, and his tentacles have found himself all over the world, and he is loved in the Middle East amongst all that oil money. He's loved all around the world, and he has a cult following. And the only person right now that's not on Elon Musk's bandwagon is probably Elizabeth Warren, who tried to get the deal blocked yesterday. Yeah. Good luck to her.
Yeah, I agree. Steve and I speculated, Michael, that Tesla, the fact that they sell cars now is almost incidental. They're a battery company and a technology company,
robotics company, really, right?
Robotics and
that's the integration. That is what he's going to probably use at some point to merge. I do think it happens. I won't be happy about it, but I do think they merge.
Well, when you see the stock, Tesla, when everybody, all that's discussed is how bad, quote unquote, how bad they're doing, but yet this, right, but yet the stock is holding 400 for all this time.
Yeah.
There are people out there that are thinking, wait a second, I'm not going to sell because of this merge. That's what I'm hearing, and I'm getting that feeling that it'll happen soon.
Right. And interestingly enough, it's kind of funny. If you read through the S1, it talks about his compensation package. And his compensation package begins to vest at a $7.5 trillion valuation. So when we started reading this, we're like, oh, wow, this is a dream. You know, our CEO wants a valuation, 6 times that. And then the news starts coming out about Tesla. And then I'm saying, wait a second here. This could be a sneaky move. It doesn't talk about how you get to 7.5 trillion. It talks about a 7.5 trillion valuation. If he merges these two deals together, it's probably going to be a $4 trillion valuation right there.
Yeah. I think it's a pretty safe bet. I bought Tesla late to the game, but I still bought an awful lot of it at 259, and I've been enjoying the ride since then. I didn't sell it when it hit 500, but I'm still comfortable with my position for sure.
I think my favorite part of the Tesla deal is this. I don't know if you guys know Jim Chanos. Guy's just an awful human being. He's a progressive short seller.
Can't stand the guy. Can't stand him.
There's nothing about that guy that I like. Nothing.
Not even his face.
And I mean, not that it matters, but even the ugliest dude I've ever looked kind of looks
I
like
just
Shrek.
said that, right? I just said
kind of looks like Shrek. Yeah,
he's as ugly as you could get, and he's all he does is talk his stocks down. That's it.
Exactly. So he's short. He hated Tesla at $25. He's got to really hate it now. So he came out and said he can't understand how in the world SpaceX grew public that valuation, right? So let him short it again. I mean, he's already gotten smoked once, but it just guys like that just irritate me. And the short selling world is slowly but surely becoming a dinosaur. Andrew Left is going to jail. Jim Chanos is, God only knows what's up to him. But yeah, it's a dinosaur now. And I think that's just a telltale sign how the new age prices these companies. And it's just not based on, what is today's sales to price. It's not like that anymore. Everything is 3 years, 4 years down the road. We may be 200 times sales today. 3 years, we may be 2 times sales. And that's how they're pricing these deals. And it's worked, not for Chanos, but it's worked for the regular investors that attach themselves to Elon and his crew.
So after SpaceX, what do you have in the hopper already that you feel good about? And what do you think of up and coming private equity projects?
So we have a pretty significant position in Anduril. We have a decent sized position in Anthropic. I think that Anduril is kind of an offshoot of Palantir, which was an incredibly successful AI company. So a lot of the management switched over. They formed Anduril. I think drones are proven to be incredibly effective. If you look at the war over there in the Middle East, Iran was using $20,000 drones, and we were using $2 million missiles to take out $20,000 drones. I think the math was kind of showing the importance of this business. And now Anduril has heavily engaged deals with the United States government. So they're becoming a government contractor. They also have great relationships with Palantir and with SpaceX. So I think Anduril is going to be a really good IPO. I think that happens in 27. Anthropic, I wish I had gotten in earlier. We have a decent valuation. We're obviously in the money right now, not nearly like we were in SpaceX. So those are kind of my 2 deals. I'm in another deal called Adipar, which was a complete spinoff of Palantir. Joe Lonsdale formed that one. We started buying that one cheap. The valuation's really gone up. So they're a fintech AI company. And I think my worry is how many can the market digest? How dilutive and how close can you go public to these other 3? What's there for you? And I feel like Elon was smart. He was the first to go. And I think it took a little bit of the life out of OpenAI and a little bit of the life out of Anthropic, because nobody's talking about OpenAI and Anthropic. And by the way, OpenAI would, did the biggest financing in the history of the world in the private sector. So there's money out there, right? It's just a question of how much money is out there. And for us, I think, we're going to keep plugging away. I think this SpaceX changes things for me drastically from an AUM standpoint, just from a no pressure standpoint. The liquidity is going to be amazing, and I think I'm just going to bide my time, enjoy this a little bit, and buy some racehorses and try to win a Kentucky Derby again. But that's kind of where I'm at right now.
So everybody's pretty split on one of the old deals, which is Palantir. I look at it myself, and I'm not sure if it sees 100 first or 200 first. Any thoughts?
Look, I was surprised it saw 100. So, I struggle with their valuation simply if you look at SpaceX, their TAM is so ridiculous because they're in so many different places right now. Their infrastructure side could end up being way bigger than their aerospace side. Palantir's technology is Palantir's technology, and they are proven to be very good, and they continue to modify and improve their AI, and now are a government contractor too. But I just don't know at what capacity they can continue their growth cycle. And they face competition too. There are other companies that are trying to do what Palantir does. Maybe they're a little bit behind, but they are. So I feel like Palantir, if you have it, you hold it. If you don't have it, you sit on the sidelines, maybe wait for it to sell off a little bit and then come back into it. But look, I owned the stock at 5, and full disclosure, I sold way too much at 40.
Yeah. So me too. I owned it at 5 and at 9, and I sold it about 35. I was commiserating with our mutual friend Sandy about that.
Yeah, and a lot of it is the stupidity that the street followed this idiot Andrew Left. He came out as a progressive short seller and put out a lot of BS and things that weren't factual, and the stock had a lot of momentum, and it worked its way from $5 to $30, and he comes out and says it's a casino stock and it's completely fictitious and the business is not real. Like, you just should not be able to do that. If you're influential in the marketplace, you can't make a trade, come out and just lie and then have the stock react to your lies. You then trade your position against those lies and everybody else gets stung. The truth of the matter is everybody that was on the long side that sold because of him, that it cost a lot of money, a lot of people.
Does Michael
clients.
Burry do that too? Would you say Michael Burry is guilty of that stuff now too?
I would say Michael Burry is a complete idiot. Just a complete idiot. And he's using the housing market where he made money, betting against mortgage-backed securities as an everlasting token for his brilliance. Meanwhile, he's just been getting murdered for the last 15 years in everything he's been done. His fund is open, then it's closed tomorrow. It's open again here. It's just crazy. And people still listen to this guy. And, it's like, look, I won the Derby in 2008. You ask me who's going to win the Derby next year, I have no idea. But I'm not going to say I won the Derby in 2008, so I know who's going to win the Derby next year. I have no clue.
That's a good analogy.
Crazy.
Michael, Steve and I have been red hot on our podcast. If you have been following, those people who have followed us have made a lot of money in the stock market, and they've got some really highly appreciated positions. And now in the last week, things have come off a little bit. What would you advise our listeners who still have big profits, but not quite as high as they were a week or so ago? Do you sell a bounce at this point? Where do you think the market goes from here?
Well, the first thing they should do is continue to follow your advice, right? That's number one.
Yes.
Number two, I think that the market has to figure out what's actually going on. It was the sell-off geopolitical, was the sell-off interest rates, was the sell-off SpaceX. And I think a lot of that is going to unwind itself next week, right? So when SpaceX is public and it's been digested into the market, is that going to help? Was the selling to create new money? My instincts is probably not that. My instincts are geopolitically, I don't think it's that either. I think Trump can get on tomorrow and say the war's over, and then the oil crashes, and then the next day he could say, I'm going to bomb the shit out of them, and then oil goes up $10. I don't think it's that, because we've been in that cycle now for 6 months, 7 months, whatever it is. I do think, though, that the potential spike in the CPI, and inflation is still a little bit of overhang to the market. And I feel like if rates aren't going to come down and they're going to sit, or even potentially if they can go higher, I think that's what's going to draw the bid out of the market. So I think really the next week is going to tell us something. It's probably going to knock out the SpaceX deal. I think we're going to get through that fine, but I do think that we are watching interest rates.
Yeah, for sure, for sure. And Steve and I have said that the bond market is really the one that's dictating the direction of things to come. One of the other things that we've been very bearish on here on our podcast, Michael, is Bitcoin. In fact, I called for it maybe hitting a low by October, November of maybe 28,000. Do you have an opinion on Bitcoin?
Well, you kind of know I've never been a Bitcoin guy. Not that I'm not saying it doesn't make sense. For me, it just didn't make sense from a monetization standpoint. And I always felt in my eyes that it was governed as a currency but traded as a security. And I know the regulations have gotten so much better. I just mathematically, for me, I'm not a new age outlaw, so I always struggled with the monetization side. And I think that if you look at it, very intelligent money has poured into Bitcoin. There's no question about it. And I can't tell you what the sell-off is or was. I just have an issue with the concern of owning a currency and being worried about somebody else selling the currency and moving that currency on a 5% basis intraday. That I just don't know. But what I can tell you is that, you take a guy like Tom Lee, who's a very intelligent guy, and he thinks it's the best asset class in the world. So I'm not gonna bet against him. And I think that inevitably it'll work itself out. I think, MicroStrategies has no choice, so they'll just buy it all if they have to. Yeah. But I am not the guy to give good advice on cryptocurrency. I know you are. I'm not. I think that for me, I would rather invest in private equity and do those other things. But there's clearly money to be made in it, and I clearly was an idiot for not investing when I should have years and years ago, because it's minted many billionaires.
Yeah, for sure it has.
Yeah, but Mike, don't you think that the way it works is that you get people are hot for the moment? So Tom Lee, very hot, very smart, and he was called some really good movement. But at some point, the gurus, they are wrong, because nobody's right all the time.
Yeah,
and when they're wrong, they slowly fade away. Because although I can't remember all these women's, the people's names. Yeah. But if you remember, like over the last 10 years or 15 years, how many of the pundits have come out and they were so smart at one point, and then you never hear from them again.
Well, the only one that I know that sticks around that is completely out of his mind is Jim Cramer. I mean, that guy he just throws darts every day and he flip-flops. Today he's long, tomorrow he's short, same stock, and he somehow survived this all. But
yes. Well, it's his personality, yes.
Yeah, the difference between the pundits and the difference between the money managers is skin in the game, right? Tom Lee has written the checks. His fund has crazy, and I know it's getting smoked, but he has written the checks. Jim Cramer, he's a little toy fund or something. That's not a check. So, they do say follow the money in a lot of places, follow the smart money, and I think if there's one guy that could fix Bitcoin, it's probably Elon Musk. And he's a big believer in cryptocurrency. I'm not saying he's a big believer in Bitcoin per se, but he's a big believer in crypto. And again, for me, it's a buy-sell market. And I struggle with the idea of owning a currency and worrying about that currency on an intraday basis on a 5% day. That's just not a currency to me. So again, I think that the way I always understood it, it was a form of gold, it was an offset to risk. I feel like it doesn't trade like that. I feel like it kind of weaves and bobs with the market itself to the upside and to the downside. So I just don't know. I'm definitely the wrong guy. And I know when to stay in my lane, but I'm the wrong guy to give really good sound advice on cryptocurrency.
So Michael, at first, we were very impressed with ourselves because our viewer and listenership was pretty young. And then I said to Steve, we shouldn't be that impressed because 60-year-olds don't really listen to podcasts. You know, it's a young man's game.
Yeah.
So we always talk a little bit about, you know, young investors and what they should do. And the example I'm going to give today is if you save $1,250 a month, it's still, after 22 years, that's about $330,000. It should be worth about $1 million. So everybody's got to get started early. These pre-IPO opportunities are young people with smaller amounts of money able to participate, or is this an accredited investor's game only?
Yeah, no, the regulators are very stringent on these deals. Why? Because they're an all or none. And they are qualified purchaser only, requires significant income, significant net worth, and frankly, not for those kinds of investors. Because, for example, even take SpaceX, for example, it's taken a long time for me to monetize this, years, with no guarantees. And if you read through a lot of the things that Elon has talked about, even SpaceX, who's now going public as the biggest IPO ever, was on the verge of bankruptcy. He said at one point they were literally out of money. Their rockets were exploding. You know, that they were having all kinds of financial issues. The market wasn't giving them the asset class they wanted. They were struggling getting money. There was no banks willing to lend the money. They were fourth and goal. And fortunately, they turned it around. But the SEC and FINRA is really protective on these kinds of deals for the ordinary investor that doesn't have risk capital. And, you know, young kids that start, my opinion for them is the market is the right place, but they should just put money in some of the big cap names, some of the names that we know are going to be around in 20 years, and just leave it and don't trade it. And I feel like there's way too much trading going on in the market, and it's very hard to day trade. And I feel like if you, time is proven. I mean, look at Warren Buffett, right? Look, he does not rotate his portfolio. It's proven over time. Put it in there, it'll grow. And I think that's the best advice.
Yeah, you know, private equity is an interesting thing. I made an investment a little over 10 years ago in a blockchain company. We just did a private round at about a 12x from where I invested, which is great. Okay.
That's amazing. Yeah.
But it's, number one, it's still not liquid. I have not had access to my cash for almost a dozen years. And
Right.
in a dozen years in this market, I could have done pretty well too. So it almost has to be a good score for it to be worthwhile.
Right. And I think the same goes. It's crazy. I mean, I don't know if you read this, but in the SpaceX deal, 4,000 employees of SpaceX are going to be millionaires. Even right down to, you know, the janitors that took stock instead of cash, or half compensation, half stock. But it took all this time for them. And many of them were at the point where they couldn't coexist financially. So they were selling stock in the secondary market privately, and we were buying a lot of that. So we bought a lot of stock from employees at cheap prices. And look, at the time they needed the money. Now they feel bad. I feel bad, right? But we provided a service to the company when their investors and their insiders and their employees needed liquidity. We provided it for them.
Maybe they needed a house. Maybe they needed to put their children through school.
Right.
I think you did get great prices, but I think you also provided a benefit. That's for sure.
We did. It was one of these deals where, you know, of course now they regret it, but at the time it's served both. And that's how we pretty much gained a significant part of our share in this deal.
All right, Steve, do you have anything else?
No, I'm just incredibly impressed. So you started out as an investment advisor?
No, I started off as a broker in a very small cap bucket shop. As
Okay.
a 21-year-old, I had no idea what he was doing. And slowly but surely morphed into private equity. I've known Bruce for 30 years, and the world today is so different. You know, the market is so different, and the way in which the regulators want money to be managed is so different. So what's becoming clear is everything is moving towards managed money. That's where the regulators want, right? So I'm still out there as this renegade, you know, not playing their game, but but I've been really, really lucky to have hooked up with a bunch of guys that put in the work, both from the analytical side and procurement of share side. And man, has it really worked. And I've made, you know, a lot of money for a lot of my clients, and it's been amazing. I love it, but I still love horse racing more.
So
Right, so it'll just be horse, eventually you'll just be a horse guy and nothing with private equity, or you'll just keep doing this because you're young. It seems like you're young.
So my best friend, I hired his nephew 10 years ago, maybe more, 14, something like that years ago. He knew nothing. He was in the contracting world. And I said, look, come work for me, learn the business. Little by little, he's learned the business. And now I could essentially turn the entire operation over to him. He's become incredibly good at what he does. He's taken a lot of pressure off of me, and it allows me on a daily basis to live down here in South Florida, like Bruce, and enjoy the sun and do the things that I love and get to the racetrack and have fun. And now he's gonna continue to carry on that legacy that we've created. And you know, as far as you know, AUM, I mean, we're gonna be sitting, you know, somewhere like $750 million, and that's a lot for just one broker. That's not the firm, that's our business, right? So it's been incredible, magical. And you know, now he's a guy who's, you know, 41 years old that's going to do this for another, you know, 20 years like I did. And you know, it's just been great. And the, you know, the guy that runs my firm is a young guy too, you know, in his late 40s. So it's the business is changing, and I still want to do what I want to do. And right now it's worked really well for us. And as long as they're going to let us continue to be operating like we are, I'm going to play it, because I'm not a guy that wants to be a money manager and be happy with turning 6% of profit a year for my clients. That's not what I'm about.
So Steve, I have to tell you a funny story about Michael and I. Michael said he worked for a bucket shop. I don't know if they were a bucket shop, but they were a tiny firm called Joseph Dillon, and I think
No, that's not the firm I'm talking about. I started in the business at A.R. Barron as a cold caller, and all those guys went to jail.
Yes,
I wasn't even registered at the time. That's the one I was talking about.
Okay, well, I got to know Mike because he was at Joseph Dillon. I was national director of sales for a pretty decent sized investment bank, and I wanted to buy Joseph Dillon. And I did for about $1.25 million. And my bosses were like, Bruce, why are you buying this piece of shit company? And I say, they got one guy there. His name is Michael Iavarone. He raises money. He's smarter than the average bear. He brings in money from Europe. He's worth $1.25 million to buy the whole firm. And they go, all right, let's meet him. And I take Michael Rabinowitz and John Marciano to Joseph Dillon to meet him, and he goes, yeah, I think I'm leaving the business and I'm going into horse racing.
Yeah, I remember that day like it was yesterday. And what you want to hear something crazy? That was like 25 years ago.
Yeah. Yeah.
I'm not telling anybody how old I am, but that was like 25. And I remember it like it was yesterday. And I did not have any conversation with the owners of the firm. And they had basically just out of nowhere, like we're making changes and adjustments. And I was already in my mindset. I'm saying, you know what? I kind of had it. I think I just want to be in horse racing. And I told Bruce, I did not even know Bruce was. He looked at me like I was a ghost and I was the biggest piece of crap in the world. And I was so confused, right? So anyway, about a month later, it comes back to me that Bruce is really upset at me. And I'm like, what did I do? Like, I had no idea. And would you know it? Like, I came back to the business maybe like 10 years later, and he was the first guy I called. And he was the first guy to hire me back, and he set me on the path. And he's probably the reason why I came back into the industry and have been fortunate enough to do what I do right now. So
fantastic.
thank
What
you
a story. What a story you have, boy. What a story.
Yeah.
It's crazy.
It actually worked out. You know, Sal Fradella has been a pillar at that firm, and, you know, he's probably made it worth $1 million and change, you know, but it took 20 years to get there. But anyway, things work out. Michael and I are still great friends. I actually hope to invest in a horse with him soon because, number one, Michael is a straight up guy. You always get a fair shake, and it's fun. It's an absolute fucking ball. So
Yeah, I am telling you, it's just nothing like it. You know, when you have a good horse, it's the only thing it's the only game in the world where you could be owning a racehorse and you're competing directly against the guy to your right, like a Mike Rapoli, for example, who's worth $15 billion. He's got a horse in the same race. And you're side by side in the box next to him, and you're like two peas in a pod. And it's in your mind, it's like the Lakers against the Celtics in the NBA Finals, except he has 15 billion in the bank and you have $15. You know, it's the only sport that you can manage your own team, and you can get lucky because there are some horses you can buy for $10,000 that get to the Kentucky Derby. There are some horses you pay $10 million for, and they can't beat the horse you pay $10,000 for. So it's incredible business. It's a blast. When we did the show, I was on a Netflix show called Race for the Crown. They did a really good job of really putting out there what makes the game so exciting. And it really comes back down to one word. It's hard. The game is hard.
yeah,
It is hard to be successful.
people
And
should
it's-
watch Chasing the Crown. It's a Netflix miniseries. Michael's in it, is one of the stars. It's highly entertaining. One more quick story. We had a horse together named Manhattan Dan, which was a real competitor. But one day he comes to me, he says, we should buy this horse. It's called Don't Be So Salty. If you looked at this horse, man, the horse had one eye, you know.
And he
never
did.
think,
He
you
did.
know.
He had a pebble and it kicked into his eye and he lost his eye.
Yeah. In the meantime, we won a bunch of races with him.
Yeah.
And then Mike says, you know, I think we should sell him. I said, all right, you know, so sell him. And like the horse dropped dead not long after we sold him. You know, it was just, I'm sorry for the horse, but it was great that we got a bunch of money back from it.
The only thing I learned about the whole thing is I think eyes are overrated, right?
Yeah.
Sometimes we're better off we can't see. Just go.
Yeah.
Just go.
So I always
know,
finish with a
fun.
joke. So I got a joke that I've been waiting to tell for a while. I saved it for a 1-year podcast. 2 young men join a hunting club, and they figure it would be cool to seek out the eldest member of the club and ask him to tell his best hunting story. And they do that, and they ask the guy, and he says, well, it was back in 1949. I was hunting in the jungles of Africa. For the first couple of days, we didn't see anything. And then I was walking down a path, and all of a sudden, a lion jumps out in front of me and goes, roar. He goes, well, I just shit my pants. And the 2 young guys said to him, that's okay, Pop. If we were with you, we would have probably gotten startled too. We would have shit our pants too. He goes, I don't mean back then. I just mean now. When I said, roar.
Awesome. Love
All
it.
right, so
Yeah,
Michael,
that's the one you saved for our
Yeah.
1-year podcast. Okay.
I love it.
anyway, I liked it.
Well, I haven't shit my pants yet, so far so good.
Michael, thank you so much for being on a guest. We'll give you the links so that you can check out our YouTube channel. And
Yeah, I'll
you'll
attach
see
it.
a
I'll attach
bunch
it to
of
my
clips
Instagram
on
story.
Instagram.
I've actually become I've got a large Instagram following. So
Nice.
Yeah, you do. So
Yeah.
give my love to Jules, and I'll talk to you soon. Thank you.
same here, guys.
Bye.
Thank you, Mike.
care. You got it,
Thank
guys.
you.
Take care. And congratulations on 1 year.
Thank you so much.
All right.